This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Bernanke speaks and investors are listening. Late today, the Federal Reserve Chairman says the economy still needs his help, and his comments could have a big impact on your money.
Summer camp for moguls, Sun Valley style. It's where mega deals get done, and tonight we'll take you there and tell you what's being discussed by some of the biggest names in media and technology.
And back to school. Yes, it's July, and yes, retailers are starting their sales on notebooks and pens, and with good reason. We have all that and more tonight on Nightly Business Report for Wednesday, July 10th.
And good evening, everyone. A very busy news day, especially late in the day. If you thought the market's fascination with the Federal Reserve and Chairman Ben Bernanke was over, you thought wrong. Tonight, speaking to economists in Massachusetts, the chairman says the economy still needs help and that the data show the Fed's current accommodative monetary policy is still needed for the foreseeable future. On that news, bonds and stock futures rose and the dollar fell. The market also twitched slightly earlier in the day when the Fed released its minutes from the June meeting. Now, those records show a much more sharply divided Fed than previously thought. About half the officials thought the Fed could end its bond purchases by the end of the year. And the other, more accommodative half basically said, not so fast. Let's see what the data say. Here's what Ben Bernanke had to say on that tonight.
Both sides of our mandate, both the employment side and the inflation side, are saying that we need to be more accommodative.
On Wall Street, investors mulled over those minutes, trying to figure out what the Fed's next move might be and what they might mean for interest rates. Now, those comments from Chairman Bernanke late today that we just told you about will certainly set the tone of trading tomorrow. Ahead of that, here's how the markets closed today. The Dow lost 8 points, the Nasdaq rose 16, and the S&P 500 edged up a fraction. But there was more action in the oil markets. Crude prices spiked to a fresh 16-month high, shooting up nearly $3 to $106 a barrel. The catalyst for the move, U.S. stockpiles of oil fell more than twice the amount that analysts expected.
And joining us now to talk more about the next moves from the Fed and the economy more generally, Glenn Hubbard, Dean of Columbia University's Business School, former economic advisor to President George W. Bush. And Mr. Hubbard is also the author of the new and groundbreaking book, Balance, the Economics of Great Powers from Ancient Rome to Modern America. Mr. Hubbard, welcome.
Thank you.
There's a lot going on here this evening. You saw the open of the program. My question for you is, if you were sitting on the Fed's governing board, the Open Market Committee, how would you have approached the discussion about continuing quantitative easing?
Well, I certainly agree with Chairman Bernanke that the economy's recovery is still not vigorous. I don't think that's much in doubt. The real question is whether quantitative easing, continuing it, is going to help that much. I'm rather doubtful of that, and I think it still leaves great risks. On top of that, the Fed's communications certainly lately leave something to be desired.
Glenn, nice to have you on the program, especially on a night like tonight. Tell us, you say there are risks of continuing quantitative easing. What are some of the unintended consequences here?
Well, I think some of the risks have to do with misallocating capital in capital markets, of having such low levels of interest rates and then the expanded balance sheet for such a long period of time. The other is the risk of what happens when the Fed exits, the need for more clarity on what an exit strategy is.
Do you think quantitative easing, the bond buying that the Fed has engaged in, very unconventional monetary policy, do you think it's helped really at all? Has it created jobs? Has it brought interest rates down, mortgage rates down, and has that helped the economy?
It has certainly brought longer-term interest rate down, but the Fed's own studies would suggest that incremental quantitative easing is unlikely to have a very large effect on the macroeconomy. What the economy really needs is an improvement in business confidence that would probably come more from better fiscal policy than monetary policy.
So there's really not much more the Fed can do. Is that what you're saying? The rest of it has to come from Washington?
I think really it's the removing the gridlock in fiscal policy is far more important than what the Fed can do.
Well, let me just a second, Tyler. Sorry to jump on you, but your book is talking about financial imbalances. So, and a lot of it has to do, you say, over history of politics.
Right.
So, what are the pitfalls here? It seems like we're at an inflection point where this knowledge of history might be helpful.
Well, I think we are. The point that's made in the book is that when politics doesn't keep up with economics, great powers stumble. And in the case of the U.S., it's the very large debt buildup and the fact that our political institutions don't seem to be able to control it. We do have to make some change if we want America to remain on top of the economic power list.
Why do you think the political system has not been able to keep on top of the fiscal situation? Isn't that their job? Wasn't that your job in part when you're working in the White House?
It's definitely their job. The problem is that our budget rules were built for a period when big movements in debt were about war and peace. Now they're really about entitlements that aren't even on the budget. We have to change our rules, our processes.
All right, so I want to ask you about succession at the Fed, because there's been a lot of guessing of who it might be. Larry Summers, Janet Yellen, these are the names that are coming up. First of all, do you think there is going to be a change at the top of the Fed, and who might it be?
Well, that's certainly up to President Obama. I think Ben Bernanke has done a very good job at the Federal Reserve. If the president were to choose someone else, he certainly has a number of very good names from which to choose. The real question for whoever the chairman is what will be his or her view of the economy and his or her exit strategy from the current policy.
One very quick final question. Do you think the economy will strengthen in the second half of the year or not?
I don't see market strengthening in the second half of the year. I see a continued muddling recovery, to be honest.
Mr. Hubbard, thank you and congratulations on your book. Appreciate you being with us. Glenn Hubbard is Dean of Columbia University's Business School.
Well, one thing the Fed keeps a very close eye on is housing. And today, just as mortgage rates hit a 2-year high, applications for new mortgages fell by 4%. And it's those rising mortgage rates that's creating sticker shock for home buyers. Diana Olick has that story.
At a broker's open house in Northern Virginia,
table and chairs there.
Agents are sizing up this single-family home and recalculating what their clients can pay now that mortgage rates are far higher than they were just 6 weeks ago.
It has gotten a lot quieter, which is a shame because historically the rates are still very low.
I've heard some people say, well, that's going to really cut down on business because people are now going to say, hey, I missed the boat. I'm going to hold off. I'm not going to go out and purchase.
Mortgage rates are now a full percentage point higher than they were in early May, but it's not so much the rate, which is still historically low, it's the sharp jump.
We had this spike happen, 45% jump in mortgage rates from 3.5 to 5 over the period of 6 weeks. I can find no precedent for that. The only precedent I can find for that is the loss of the homebuyer tax credit in mid-2010.
That stimulus, which Hansen calls small compared to the government-induced 3.5% mortgage rate, caused a huge drop-off in sales of new and existing homes when it expired. New home sales fell 38% in a single month in the spring of 2010.
My biggest concern is we're just not going to have demand anywhere remotely close to what we had 3 months ago, 12 months ago, when this super Fed stimulus was in place.
Compounding the rate shock is sticker shock in home prices, as very tight supply has buyers outbidding each other.
I think that it's been a lot of pent-up demand from buyers who want to buy right now, and plus with the rates going up, that the buyers, they want to act right now.
The question is, how long will that last? In May, we did see a rush to buy as rates started going higher. Signed contracts hit a 6-year high, but that was before the recent spike. And while rates at 5 or 6% are not historically high, it was the spike that spooked the market. And the fact that for consumers, 3.5% had become the new normal. For Nightly Business Report, I'm Diana Olick in Washington.
For more on the impact of rising mortgage rates on the housing recovery, log on to our website, nbr.com.
A big setback for Apple today. A federal judge in New York ruled that Apple conspired to raise the prices of e-books. She came down hard on Apple, saying the company not only colluded with 5 major publishing houses to take on Amazon's lock on electronic book sales, but it masterminded the strategy. According to the ruling, Apple encouraged the publishers to jack up prices 50% or more virtually overnight as a way to break Amazon's super low $9.99 book prices. Apple insists it did nothing wrong and will appeal the ruling.
Apple is also facing a ban of some of its top-selling gadgets slated to begin on August 5th. Apple is asking the U.S. International Trade Commission to lift the ban imposed on certain iPhone and iPad models, pending its appeal of another case the company recently lost. Last month, the ITC halted the future U.S. sales of iPhone 4 and the iPad 2 3G in a ruling that Apple infringed on a patent owned by rival Samsung Electronics found in technology on those two devices.
The Tribune Company wants to split itself into two companies. It plans to separate its newspaper publishing business, which includes big dailies like the Los Angeles Times and the Chicago Tribune, from its more profitable broadcasting division. It's similar to the split at News Corp. Just last week, that media giant spun off its 21st Century Fox movie and entertainment unit into a separately traded company.
Some of the biggest names in media and technology, sports, venture capital, they're gathered out in Sun Valley, Idaho for the annual Allen & Company Conference. That's where some big deals have been made in the past, like the Time Warner AOL merger in 1999. And Julia Borston shows us what big deals some of those participants may be working on right now.
The Allen & Company Conference is nicknamed Summer Camp for Moguls, with big names like News Corp's Rupert Murdoch, Time Warner's Jeff Bewkes, Amazon's Jeff Bezos, even Warren Buffett. The gathering of about 300 media and tech CEOs, startup founders, and investors includes off-the-record panels on topics including education and cybersecurity, and speakers such as Facebook COO Sheryl Sandberg and IAC's Barry Diller. And in the halls of the lodge, everyone's talking about the economy.
My outlook on the economy is hopeful.
Europe's been tough, as everybody knows, and there's been some signs of life here in the United States, and we hope that it can continue.
With Sun Valley's track record for mega deals, now everyone's watching Hulu's billion-dollar sale, and all the major players are here. News Corp and Disney are in talks with DirecTV and Hollywood veteran Peter Turnin, as well as Time Warner Cable.
Clearly, we're going to see something with Hulu because they're in play. I'd like to see Hulu get acquired by somebody, so that creates another competitor to Netflix and Amazon. Hulu's a great platform, very strong. The more people that want our content, the better.
Since Rupert Murdoch's News Corp is sitting on $2.6 billion in cash, and there are reports that Sony CEO Kaz Hirai will spin off the company's entertainment division, attendees here, like BET founder Robert Johnson, anticipate a surge of deals.
There's still plenty of cash out there circulating, and the question is, what's the best deal you could find in a marketplace like this? I think digital is a growth spot.
That digital growth means more digital CEOs here, like Twitter CEO Dick Costolo and Jack Dorsey, Twitter's co-founder and CEO of mobile payments company Square, both of which could be the next mega IPO or acquisition. The conference also introduces media moguls to less familiar startups, like Pinterest Ben Silbermann and Nicholas Woodman, the CEO of wearable camera company GoPro. With so many deep pockets, we're watching for deals. For Nightly Business Report, I'm Julia Borston in Sun Valley, Idaho.
Still ahead, how much does the U.S. need China and China need us? We'll look at the economic ties that bind the world's two largest economies. But first, here's a look at the closing numbers for the international markets.
A major ruling by Wall Street regulators. For the first time ever, hedge funds will be allowed to start advertising. The Securities and Exchange Commission voted to lift a decades-long ban on hedge funds marketing, which investments they're putting their money into.
Also in Washington, the Senate today failed to pass a plan aimed at restoring lower interest rates on subsidized student loans. 1 week after the inaction by the Senate caused rates on new Stafford loans to double, the Senate voted down a measure to return rates to 3.4% for another year. The hurdle, a competing plan that would link student loan rates to the benchmark Treasury rate.
The chief executive of the pork producer Smithfield Foods got a grilling from members of the Senate today over the proposed acquisition of his company by China's Shuanghui International. Lawmakers wanted answers on the safety of the U.S. food supply and what foreign ownership of the world's biggest pork producer would mean to workers and to the U.S. CEO Larry Pope told the Senate subcommittee what he thinks the takeover is all about.
This transaction is about exporting high-quality meat from the U.S. to China to meet their growing demand. This combination will not result in any U.S. imports of food from China.
The deal would be the biggest takeover ever of a U.S. company by a Chinese concern.
A troubling sign of a possible slowdown in China's red-hot economy today. Chinese trade data for June fell sharply. Chinese-made exports fell more than 3% compared with the same month a year earlier, and imports into the Asian nation were down as well. Both measures were well below forecasts.
Meantime, the U.S. and China opening talks in Washington today at the annual Strategic and Economic Dialogue aimed at building cooperation between the world's two biggest economies. Among the attendees representing the U.S., Secretary of State John Kerry, Treasury Secretary Jack Lew, and Vice President Joe Biden.
Maintaining an open dialogue between the U.S. and China is more important than ever as the world's two biggest economies increasingly rely on each other despite their differences. Eunice Yoon shows us just how much the two countries have become so closely connected.
Grab a handful. Yeah, grab us a handful. Come on, get some.
When the U.S. ambassador in Beijing takes time off his diplomatic duties to market imported American cherries to hungry Chinese at a Sam's Club, it's clear China is important to America.
More interaction between all of our peoples at every stage, from academia to students to scientists and policymakers, business people, is critical.
The two largest economies depend on each other and are trying to reboot ties. Nearly a fifth of China's exports go to the U.S., while American exports to China have jumped nearly sixfold since Beijing joined the World Trade Organization over a decade ago. Yet the two do as much bickering as trading, arguing over market access, foreign policy, and industrial espionage.
When it comes to the theft of commercial intellectual property, that is a huge problem, and it is one where China is clearly culpable.
Many people here in China believe that the United States may would like to, try to block the development of China. So that's why we see this kind of mistrust, a deep-seated mistrust.
Even though China is growing in strength, it relies on the U.S. for growth, jobs, and investment. This Chinese auto parts maker sends 3/4 of its exports to America.
Almost all of these car parts were made for American companies, and they're shipped out every single day.
We want more Americans to buy our products, this factory worker says. The more our company earns, the more money we make. And the more American goods Chinese will be able to afford.
For Nightly Business Report, I'm Eunice Yoon.
And an American company with big business in China leads our market focus tonight. Yum Brands reporting sales in China tumbled 20% because of the avian flu scare. Yum operates KFC, Taco Bell, and Pizza Hut. The company sees those China numbers turning around in the fourth quarter. Despite all of that, quarterly profits did beat analyst estimates. Shares of Yum had drifted lower during the trading day and then popped slightly in after-hours trading. Yum Brands closed at 72.36. Hewlett-Packard led the Dow gainers today thanks to a new buy rating from Citi Investment Research. The analysts doubled the price target to $32 a share and increased earnings estimates, saying cost-cutting will boost profits. HP jumped almost 2% on triple the volume at $25.93, setting an 18-month high.
Family Dollar led the S&P 500 winners, reporting profits that topped estimates and expects full-year same-store sales to increase by 3 to 4%. Now, Family Dollar CEO Howard Levine said customers will continue to face financial headwinds, and that might actually help his business. Still, investors crowded into the stock, more than 8 times normal trading volume today, shares up more than 7%. And Pharmacyclics submits a promising lymphoma and leukemia treatment for FDA approval. Earlier in the year, FDA granted breakthrough status to the treatment, which should mean a quicker approval process. Janssen Research and Development, a Johnson & Johnson company, is a partner in that treatment. Meanwhile, shares of Pharmacyclics jumped almost 12% to close at $100.26. Johnson & Johnson fractionally higher.
Meanwhile, investors continue to pull out money from bond funds, but the withdrawals are slowing down. The Investment Company Institute, or ICI, which tracks the numbers, said today $5 billion came out of bond funds last week compared to $28 billion in the previous week. Here to put these numbers into perspective is Brian Reed, ICI's chief economist. So, Brian, do put them in perspective. And also, given what you heard from Chairman Bernanke at the top of our program, do you think that investors are going to continue to withdraw money out of bond funds, or is this pretty much it?
Well, this is a pretty typical response on the part of investors to begin to pull money when interest rates begin to rise. And I think, what Chairman Bernanke said today indicated that, as the economy continued to improve, even though, they're going to continue to have very accommodative monetary policy, they will continue to factor in the improving economy in future decisions. And so I think the market is factoring that in right now. What we're seeing here is pretty typical what we saw coming out of, let's say, the 1990s recession, early in the 90s, and the early 2000s, where as interest rates rose, bond fund investors continue to pull money out over an extended period of time.
There's been a lot of talk, Brian, about the great rotation of money out of bond funds and into equity funds. Are you seeing that, or is the money that's coming out of bond funds just going into cash, into money funds, and sitting there waiting until investors feel more confident?
Yeah, we're seeing about half of it going into money funds by the looks of it. And so it looks like investors are kind of stepping on the sidelines. Inflows into domestic stock funds that are, invested in companies here in the U.S. Continue to have outflows last week. And while we're seeing money coming into international equity funds, those funds have been having inflows for, several years now. So by and large, it looks like investors are kind of just stepping aside. And it's not really too surprising, given that we've had this, incredible bond market rally, that some investors are going to step aside, even though 98% of the assets that are in bond funds have stayed there through this pretty incredible run-up in interest rates.
Can you read between all of the numbers and give us your take on investor sentiment? So they're holding onto the cash, but what more can you tell us about how they feel about jumping into some kind of investment?
Yeah, I think, investors generally, one of the things that strikes me over and over again is how really resilient they are. If you look at the, nearly $15 trillion that we have invested in mutual funds and ETFs, the flows that we're talking about here for bond funds, for equity funds are, fractions of a percent. Sometimes, they accumulate to 2% like they have since the end of May. But generally, investors are very resilient, and they understand that, markets do fluctuate. And so I think, we're continuing to see good inflows into sectors that we had been seeing for a while. And I think that's just a testament to strong investor sentiment.
All right, let's leave it there. Brian, thank you so much. Brian Reed, chief economist at the Investment Company Institute.
Thank you.
And coming up, beaches, barbecues, and back to school. Yep, retailers are already starting to push deals on things like notebooks, pens, erasers, clothing, and more. And there's a big reason why. But first, let's take a look at how commodities, treasuries, and currencies fared today. And finally tonight, the calendar may say early July, but for a number of big retailers, it looks more like late August, early September. Like it or not, back-to-school sales are already here, and according to those stores, with good reason. Courtney Reagan has the details.
While kids in some parts of the country just got out of the classroom for summer vacation, others are heading back in a few weeks, and they'll need some new clothes and fresh school supplies. So retailers are rolling out back-to-school promotions, though the 4th of July fireworks are hardly in the rearview mirror.
Customers are telling us they want to get an early jump on things. They want to start and do their back-to-school shopping several weeks before the students actually go back. And honestly, in many parts of the country, students go back in first week of August, in some cases actually in late July.
But I like coming here though, actually, because they have the big signs that say like this is cheaper than the one next to it, and it's really actually kind of handy.
I'm always looking for coupons, but I usually do back to school shopping towards the end of the school year, way before the back to school frenzy starts.
Here you can actually go online, find it and reserve it at a store and then go pick it up.
There's a lot at stake for back to school. It's retail's second most important selling period, often setting the tone for the all-important holiday season. More than $84 billion was spent during the 7-week period in 2012. Due to improving economic conditions and consumer confidence, ShopperTrack estimates both sales and foot traffic will increase this year during back-to-school shopping. While it's inevitable that children grow and pencils wear down, back to school isn't always a slam dunk for retailers.
Shoppers don't often care what brand of school supplies they buy, so retailers have to compete on price, further pressuring margins. This week, Staples is offering packs of pens, erasers, and index cards for just a penny.
They're traffic drivers. We want to win the customer's trip to our store. Our hope is that customers will come in, experience our stores, love the assortment, and buy a little bit more than just those items.
Neon-colored supplies and clothes will be big with kids this year, and online price and product comparison shopping is bigger than ever with parents. While clothes shopping tends to happen later in the season, a number of analysts project Macy's will be a top destination for back-to-school shoppers, along with big box retailers Walmart and Target. For Nightly Business Report, I'm Courtney Reagan in New York City.
Back to our top story, Mr. Bernanke speaking in Massachusetts this evening, seemingly taking a more accommodative stance, but also, based on those minutes, presiding over a more divided Fed open market committee than we thought.
Big, intensive debate, and tomorrow it'll be interesting how it plays out in the markets.
Absolutely.
And we'll be watching all of that. So join us again tomorrow night. But that's it for Nightly Business Report tonight. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow evening.
Nightly Business Report has been brought to you by sailing through the heart of historic cities and landscapes on a river. You get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrow with a Nightly Business Report news brief. Minutes from the Federal Reserve's latest meeting show the bankers divided on when to begin pulling back on economic stimulus. Figuring out the Fed's next move kept the markets in a holding pattern today. At the close, the Dow was down just 8 points, the Nasdaq rose 16, the S&P 500 edged a fraction higher. Crude prices spiked nearly $3 to a fresh 16-month high on falling U.S. inventories. Mortgage applications fell 4% last week as mortgage rates hit a 2-year high. Wall Street regulators will allow hedge funds to advertise their investments. A judge ruled that Apple conspired with 5 top publishers to raise e-book prices. And the Senate voted down a measure to keep subsidized student loan rates from doubling. Be sure to tune into Nightly Business Report right here on your public television station.